Okay, so you want to know why it's hard to find joint venture equity for real estate? Well, in this short video, we're going to outline exactly why JV equity is hard to find, and most importantly, how you can solve this problem. There's really five main challenges real estate professionals face when trying to locate joint venture equity. First, it's virtually impossible to find true joint venture equity funds that focus just on real estate. Most of the database services out there only highlight capital sources that simply focus on venture capital for startup businesses. Nobody's really doing real estate. Not being able to simply access a database of JV equity sources forces you, the real estate professional, to more traditional methods such as search engines. This leads to the second challenge. When you use search engines, the firms that come up are typically the firms that have been around for a long time. Now let me tell you, these are not the best capital sources. The older, more established firms are still trying to mop up the mistakes that they made during the last real estate crisis. The funds that are active are the newly formed startups. These rarely show up in the search engines. The third challenge, when you do finally identify a potential joint venture equity source, it's difficult to determine whether they're truly closing deals. The only thing you have to go on is their website, which is rarely up to date or accurate for that matter. The challenge, it's virtually impossible to locate the right person to submit your deal to. Originators for private equity funds are constantly changing companies. This said, once you do locate them, they rarely return your phone call. Finally, and most important, the fifth challenge. Once you get through the first four challenges and have actually found what you feel is the right source, you need to make sure the company actually has the capital to invest and is not just a broker representing the money to simply get deal flow from you. Unfortunately, so many real estate professionals fall for this trick. In an effort to get deal flow, the said capital source represents he or she is the capital, takes a due diligence fee deposit from you, once engaged, simply goes out there and tries to shop your deal to another equity source. When they are unsuccessful sourcing the capital, they make up some excuse as to why your deal is magically no good anymore, and you are left under contract with hard money up and no capital to close your deal. Knowing the five challenges a real estate professional faces when trying to find joint venture equity, we thought it would be valuable to walk you through how the private equity world actually works. Okay, joint venture real estate capital runs in cycles driven off of the current real estate market, availability of capital, and where the fund actually gets their money. Let's take a look at the current cycle. When the real estate market collapsed in 2000 and the credit crisis took place, an opportunity was born for private equity funds to focus their investment strategy on providing senior level bridge loans rather than joint venture equity. With conventional financing basically non-existent and the banks needing to get these deals off their books quickly, private equity funds no longer needed to focus on risky JV equity structures, but rather were able to achieve their equity type returns through much less risky bridge loans. This point in the real estate cycle, virtually every joint venture capital firm was eliminated. They all became bridge lenders overnight. As we move further into the real estate recovery, conventional debt markets have loosened and their quick close has significantly reduced. True bridge debt sources are now able to leverage their portfolio, bringing the rates on bridge debt down to the mid to single digits. Private equity funds looking for equity type returns are no longer able to achieve these returns in the bridge debt world, so they are now forced further up the capital stack. The same funds that were doing bridge debt are now focused on mezzanine and preferred equity financing to achieve their required return on investment. As things continue to improve, these exact same funds will be forced back into the true joint venture equity structures, as the ability to achieve joint venture type returns will no longer exist in the mezzanine and preferred equity world. This whole cycle is what makes it virtually impossible to find joint ventures that focus specifically on real estate. Unfortunately, due to what we just outlined, if you are forced to identify and research your capital sources through a website, which most people are, you will continually be misled and fail to raise the capital you need. This is because private equity funds are constantly changing their investment focus to meet the demands of the current real estate cycle, manage their funds diversification, and to accommodate their own capital raising cycles. It's important to keep a website up to date. So their solution, just say we do everything. How often have you seen that? So how does a real estate professional work through these difficult challenges? This is the question. The key is good database management. You need to build a long database of contacts and constantly be updating each fund's current focus. Otherwise, you will just spin your wheels, continually showing deals to sources that are not putting capital out. The good news, we've done it for you. Since entering the capital business 10 years ago, FindTheCapital.com and its management have capitalized in excess of $1 billion in real estate transactions. The reason we were able to do this, volume of transactions, you got to be asking the question, relentless database management. We are proud to announce that to meet the demand of our followers, FindTheCapital.com is now offering our users access to the database that has taken us over 10 years to build. What makes our database unique? Unlike other database services that randomly collect data on thousands of private equity funds and commingling both venture capital firms and every other imaginable capital source, our database is precisely targeted to just the most active joint venture equity funds focusing specifically on real estate. We constantly screen and manage our database and limit it to just the top 200 most active joint venture equity sources focused on closing deals in real estate. Our database is relentlessly scrubbed to make sure we have all the most up-to-date information on our capital sources. Keep in mind, this is the same database we use on our capital raising efforts that has produced well in excess of $1 billion in real estate capital. We literally make contact with every participant each month to understand exactly how their investment focus is changing and what types of deals they are actually doing. It's important to note that raising over $1 billion of capital for our clients, we have provided significant deal flow to these JV equity sources. Why is this important? This puts us in the position of power as the JV equity sources in our database now that they know that we limit our database to just the top 200 participants closing deals. If they are not consistently closing deals and constantly communicating with us, they will lose their spot in our database, be replaced immediately by the next fund who is more than anxious to put their own money up to work. To qualify for a spot in our database, the capital source needs to meet 5 strict criteria. First, and probably the most important, they need to actually be a direct capital source and have full discretion over their capital. We simply do not tolerate anything less than a direct capital source. Second, they need to be able to prove they are actually putting the capital out and closing deals. They are no good to us if they are not actually putting the capital out. Third, they need to consistently update us on their current investment focus. Unless we have consistent updates, the database becomes nothing more than a phone book. Fourth, they need to have a solid reputation of not retrading people and be able to produce references supporting this. We only work with the highest, most respected funding sources in the industry. And finally, fifth, and probably just as important as the first, they need to be responsive and react quickly when deals are forwarded to them. They need to want to put the capital out, not just waste your time. Let's talk about what you get within our database. You get a select database of highly active JV equity sources, including their company name and link to their website, allowing you to quickly research their company. You then get the contact information for the individual responsible for putting the capital out, including their direct dial line and personal email address, so you can stop spinning your wheels and know who to call. Each capital source contains up-to-date information on the fund's minimum, maximum, and target investment, allowing you to quickly filter the list for deal size. And most importantly, you get a detailed overview of what their current investment focus is and what deals they are actually closing. Whether it's ground-up development, office, multifamily, raw land, Midwest geographical focus, whatever you call it, you will know exactly what they are looking for. So you can stop wasting time and focus on sending the right deals to the right sources. Now, to give you the perfect platform, we've not set our database up in a database software program that needs to be accessed over the internet, like all the other database companies have done. We are delivering our database in a simple to use Excel spreadsheet. Why is this important? This provides you the most flexibility in how you manage your data. Rather than subscribing to a database service that does not work with your existing contact management system, we provide our data in a format that can quickly be uploaded into your contact management system like Microsoft Outlook, or you can simply use it in the easy to use spreadsheet format. Either way, it's very simple to use and provides you exactly what you need: access to accurate data on true JV equity sources focused specifically on real estate that are actually close. How refreshing is that? Now you're probably wondering, how much are we gonna charge for this service? Well, we did extensive research, and unfortunately we determined that we could charge upwards of $3,000 for this. Seems like a lot. We thought this was outrageous, so we considered charging half of what the market charges. How about $1,500? My partners and I still thought this was way too much. If we are truly trying to give our followers the tools and resources they need to grow their empire, we need to make it affordable for everyone. So as part of our launch of this great joint venture equity service, we are now going to offer this database for a one-time payment of just $97. Okay? We have to limit this to the first 1,000 subscribers, but $97. Yes, just $97. Okay? This is less than what a good dinner out costs you. We welcome you to take advantage of this great offer by simply clicking the download button below. You will instantly be taken to ClickBank, the industry's leading internet marketplace, to process your order both safely and accurately. Once your order is complete, you will be directed to a link that will immediately download our Ultimate Real Estate Joint Venture Equity Investor Database. Make sure to take advantage of this one-time offer. Believe me, once the 1,000 copies are sold, we will not be able to consider just $97. So gain immediate access to something that will truly take your business to the next level. Stop chasing the capital. Get the capital to chase you. Simply click the download button below and find the capital you need. We wish you the best of luck.